I was sipping my morning coffee when Sui smacked me with a headline I never expected. A 2 times leveraged Sui ETF launched on Nasdaq with SEC approval. Wait, what? A 2-year-old altcoin getting a Wall Street grade ETF before many blue chips do. Talk about making an entrance. This isn't just any crypto. Sui has somehow leapt from obscurity to rubbing shoulders with the big leagues. It's the first ever ETF tied to Sui's ecosystem, one of the few crypto products of its kind anywhere. If that doesn't crank your curiosity to the max, I don't know what will. See, 21 Shares, a major crypto ETP issuer, didn't wake up one day and say, hey, let's ETF-ify a random coin. They did this because investors are eyeing Sui's potential in a big way. In fact, there's even chatter about a spot SUI ETF under SEC review. The SEC, who's been the crypto industry's strict school principal lately, basically gave a nod for a leveraged Sui product. It's like the strictest teacher handing you a hall pass. Eyebrow-raising, to say the least. So what's behind all this Sui hype? Is Sui quietly doing something extraordinary while we're all distracted by Bitcoin and Ethereum? Today, I'm going to tell you the full story of Sui, what it is, why it exists, how it works, and whether it might just be the dark horse that altcoin season could send to the moon. Stick around, because by the end, you'll see why big money is taking Sui seriously, and whether US regular investors should too. Spoiler, the journey involves ex-meta geniuses, groundbreaking tech, and both huge opportunities and risks. All right, let's start with the basics. What is Sui? On paper, Sui, pronounced Sui, is a Layer 1 blockchain platform launched in May 2023 by a company called Mysten Labs. Layer 1 means it's a base blockchain like Ethereum or Solana, not a coin riding on someone else's chain, but its own independent network. Sui runs on a delegated proof-of-stake, DPoS, consensus, meaning it uses validators and stakers to secure the network, similar to how other modern blockchains operate. But the cool part is how Sui differentiates itself. Think of blockchain world as a busy highway system. Most blockchains are like single-lane roads. Transactions line up and go one by one, causing traffic jams when there's a lot of activity. Sui said, nah, let's build a multi-lane superhighway. It introduced a unique object-centric data model that lets it process many transactions in parallel. In plain English, if 2 actions on Sui don't involve the same assets, they can go through at the same time without waiting for each other. No more universal red light stopping every car at an intersection. Sui coordinates the traffic smartly. This is a huge deal for scalability. In tests, Sui has hit upwards of 297,000 transactions per second. Yes, TPS nearly 300,000. Under ideal conditions, blowing past the theoretical limits of even Solana and other speed demons. Real-world performance will vary, but it shows the ambition here. Not impressed yet? Consider this. Sui's core architecture treats everything as objects with unique IDs, like items in a game or entries in a database, instead of accounts with balances. If you send an NFT to someone, that NFT is an object that changes ownership. It's not just a number in your account going down. This object-based approach, inherited from Sui's lineage, more on that soon, is why Sui can parallelize so well. It's like having a zillion little conveyor belts instead of one big bucket everyone throws stuff into. Unrelated transactions don't collide. Only when 2 actions try to grab the same object do they queue up behind one another. The result? Low latency, high throughput, and a system that can scale horizontally by just adding more resources. In fact, Sui often finalizes many transactions in under half a second. Blink, and that on-chain trade is done. Sui's developers even supercharge user-friendliness. They aim for a Web 2-like experience on Web 3. For example, Sui has a feature called ZK Login that lets you create a crypto wallet using something like your Google or Facebook login via zero-knowledge proofs. That's bananas. Imagine onboarding to crypto with an email login. No confusing seed phrases initially. They've also enabled sponsored transactions, meaning projects or apps can cover your gas fees if they want. It's like a free shipping promo code for blockchain transactions. All of this is to break down the usability barriers that keep normal folks from using crypto. So, in summary, Sui is a new Layer 1 blockchain built for speed and safety, making heavy use of an innovative design, object-based state plus the Move programming language, to achieve scalability that could support mass adoption. It's gunning to be the base layer for the next generation of apps, from DeFi to gaming, without the slowdowns and high fees that plague older chains. Behind Sui is a team that makes me nod and go, "Yep, that checks out." Sui was created by Mysten Labs, which was founded in 2021 by former lead engineers from Facebook's Meta's blockchain projects. If you remember the ill-fated Libra/Diem project, Facebook's attempt at a crypto, then you've indirectly heard of Sui's roots. When Meta's big crypto dreams got squashed by regulators in 2022, a bunch of its top people said, "We're not done. Let's take what we learned and build something new." They formed Mysten Labs and started working on Sui. Key figures include Evan Cheng, Sam Blackshear, Adeniyi Abiodun, and others. Literally the brains who built the Move programming language and the DM blockchain concepts at Facebook. Evan Cheng, Mysten's CEO, spent decades at Apple and Facebook. Sam Blackshear is the creator of Move, the smart contract language Sui uses. Adeniyi Abiodun led product on Novi, Facebook's wallet. These aren't random crypto bros. They're legit experts in programming languages, cryptography, and distributed systems. Mysten Labs' mission was to take all that R&D from the Facebook era and build a better blockchain from scratch, one that could serve billions of users with the performance of Web 2 apps. And boy, did they have backing. Mysten Labs raised a war chest of about $336 million in funding in 2022 from heavy hitters like Andreessen Horowitz, A16Z, Coinbase Ventures, Binance Labs, and more. Side note, FTX's venture arm was an investor too. After FTX collapsed, Mysten even bought back that stake so FTX couldn't cast a shadow on Sui's future. Smart move, cleaning house. With that money and talent, Mysten launched Sui's mainnet on May 3, 2023. The launch was huge. Imagine a Discord community with 750,000 members buzzing as Sui went live. The hype was real. Folks were treating Sui like the next big thing in crypto, a possible Solana killer, or at least a worthy rival in the Layer 1 race. To ensure the project wasn't just a company playground, they set up the Sui Foundation, an independent org to support the ecosystem growth. The foundation handles things like grants, community programs, etc., ensuring Sui grows beyond just Mysten Labs' efforts. This kind of structure, company plus foundation, is common in serious projects. Think Ethereum's Ethereum Foundation. It's meant to decentralize development and foster a vibrant community from day one. So, why trust Sui's creators? Well, they have strong credentials, experience from a top tech company's blockchain initiative, and significant funding which they've been using to build real tech, not just marketing hype. Of course, trust in crypto should always be cautious. Plenty of smart people have built bad projects. But knowing Sui's DNA comes from years of R&D at Meta, and seeing the caliber of engineers at Mysten gave investors some confidence. Even the CEO of 21 Shares, the ETF issuer, called Sui one of the winners rising to the occasion, ushering in the next era of blockchain tech. That's high praise. In a nutshell, Sui is shooting to solve the blockchain trilemma: decentralization, security, scalability, pick two, as the saying goes, in a novel way. It's important because it represents a next-gen approach to Layer 1 design at a time when the crypto world needs fresh ideas. Ethereum is awesome, but still relatively slow/expensive until scaling fully kicks in. Other L1s, Solana, Avalanche, etc. each have their trade-offs and quirks. Sui came along saying, "We have a third way." One big reason Sui matters is scalability without complexity. Instead of sharding or Layer 2 networks, Sui tries to scale on the base layer with its parallel execution. It's basically saying, let's get it right on Layer 1 so we don't need dozens of bolt-on networks for speed. This is similar to Solana's philosophy, keep it monolithic, but Sui's method is different, object-based versus Solana's proof of history. If Sui's tech works as advertised, it could handle massive workloads, think social network level traffic, on a single chain. That's a bold vision, an internet-scale blockchain that normal people can use without even realizing it's crypto under the hood. Sui is also important for its user experience focus. The team explicitly aims for mainstream adoption, not just pleasing crypto geeks. Features like logging in with Gmail via ZK Login or dev tools that make smart contracts safer and easier are about closing the gap between Web 2 and Web 3. In Sui's ideal world, using a dApp should feel as smooth as using a mobile app. That's critical. Whichever blockchain manages to make itself invisible, in a good way, to users will likely win huge adoption. Sui is in that race. Moreover, Sui has drawn significant investor and institutional attention, which in crypto can be a self-fulfilling prophecy for importance. That leveraged ETF launch we started with, it signals that traditional markets see Sui as a contender worth offering to their clients, and they wouldn't do that if Sui were a ghost chain. In fact, Sui's DeFi ecosystem has grown. By late 2025, Sui ranks about 12th among all blockchains by total value, locked approximately $990 million in DeFi TVL. Being top 12 in just over a year since launch is noteworthy. It suggests real usage. There are enterprise-grade stablecoins like a USD peg token reportedly backed by US Treasuries, USDY, launching on Sui, and a surge of institutional interest in building on Sui's high-performance platform. In a time of increased regulatory scrutiny, SEC, Sui managing to stand out and even get regulatory green lights, ETF approval, is quite important. It hints that Sui might be seen as one of the legit players in a sea of questionable projects. Lastly, from a crypto investor perspective, Sui is important because it's part of a broader narrative, the Layer 1 Wars Round 2. Back in 2021, we had the first big wave of Ethereum killers. Now, with Sui and its cousin Aptos, which also came from ex-Meta folks, we have a new wave of high-tech L1s entering the arena. They're competing not just on speed, but on developer experience and safety. Sui's success or failure will teach the community a lot about what the next generation of blockchains might look like. If it succeeds, it validates the choices, move language, object model, etc., and could influence other projects. If it struggles, that's equally important as a lesson. But given all the buzz and money behind it, you can't ignore Sui. It's trying to push the envelope, and that inherently makes it a project to watch. Sui is tackling a couple of classic blockchain pain points head-on: scalability, high fees, slow user experience, and security pitfalls in smart contracts. Basically, Sui wants to solve the problem of blockchains not being ready for everyone. Let's break that down. Scalability and throughput. Most blockchains choke when traffic spikes. Remember CryptoKitties clogging Ethereum in 2017? Or Solana's network halts in high load? Sui's answer is its horizontally scalable architecture. The problem of how do we handle millions of users doing thousands of things per second is addressed by letting the network scale, like adding lanes to a highway or adding more servers to a cluster. Sui's design intends that if you throw more hardware at it, it can process more in parallel without a hard cap, a bit like how cloud systems scale out. By grouping transactions by the objects they touch, Sui avoids the global locking that slows others. The goal? No more congestion, ever, even during the next bull run frenzy or a viral dApp craze. Whether they achieve that at scale remains to be seen, but that's the mission. High gas fees. When chains get busy, fees skyrocket. Ethereum. Sui's high throughput should keep fees low, but they didn't stop there. They implemented a novel gas pricing mechanism that targets predictability. Validators agree on a reference gas price each day, epoch, so users have a stable fee to reference. If validators try to gouge, set high prices, or don't honor their low price commitments, they get penalized in rewards. This is pretty cool economic design. It's solving the problem of fee volatility and fairness. Sui users shouldn't have to guess if gas will cost 1 cent or $10 in the next minute. The protocol incentivizes low, stable fees. And remember, sponsored transactions can even hide the fee entirely for users in some cases, solving the UX problem of, I don't have token X to pay a fee just to try this app. slow, complex. User experience. Using many blockchain dApps today can feel like operating a spacecraft. Lots of switches, waiting, and risk of pressing the wrong button. Sui wants to solve the user friction. With ZK Login, you can make a Sui wallet via Google or Twitch login, which tackles the problem of, my mom can't manage a seed phrase elegantly. Sui's transaction finality in sub-seconds addresses the problem of waiting minutes for confirmation. No one wants to stare anxiously at a pending payment. The object model even makes it clear what a transaction will do, kind of like how smartphone app permissions tell you what the app will access. All this lowers the barrier for regular people to participate, which has been a huge problem for crypto adoption. They're basically asking, what would it take for 1 billion people to comfortably use blockchain apps, and then trying to build that? Security and smart contract risk. The Move programming language Sui uses was designed with safety in mind to avoid common bugs like reentrancy that caused big hacks on Ethereum. It's resource-oriented. Assets are resources that can't be duplicated or lost accidentally. By using Move, specifically a flavor called Sui Move, they solve the problem of smart contracts being easily exploitable. It's harder to shoot yourself in the foot as a developer on Sui compared to Solidity, for instance, because the language and runtime enforce rules that prevent many mistakes. This is solving the DeFi hack epidemic in a way. If successful, Sui apps could prove more robust against attacks, which in turn makes the whole ecosystem more trustworthy for users. In summary, Sui is attempting to solve scalability, affordability, usability, and security, essentially the main barriers that have kept blockchain from going truly mainstream. Ambitious? Absolutely. But if you've ever used a congested network or struggled explaining MetaMask to your friends, you know these problems are real. Sui is one of the projects trying a fresh approach to eliminate those pain points. Time to geek out a bit. In an accessible way. Under the hood, Sui has some fancy engineering, but I'll keep it high level and analogy rich. Consensus and transaction processing. Sui initially used a combo called Narwhal and Bullshark. Great names. Narwhal is a DAG-based mempool that orders transactions. Bullshark finalizes them with Byzantine fault tolerance. They've since evolved this into something called the Mysten consensus protocol, apparently named after a whale species. Sui devs love their whale themes. The gist? Sui's consensus is optimized to reduce latency. Some simple transactions on Sui can even bypass full consensus. If a transaction doesn't touch shared state, it can be done with a lightweight protocol instantly. Think of it like some VIP transactions that get an express lane because they're obviously safe to finalize. For more complex or shared transactions, say interacting with a shared DeFi pool, Sui uses a fast consensus to ensure everyone agrees. The result is speed. As mentioned, many transactions finalize in under 0.5 seconds, and throughput is very high. It's as if Sui has two gears, one that says, no need to gather the whole committee, just finalize it for simple stuff, and one that says, all nodes, let's agree properly for shared stuff. This clever design is why Sui can be both fast and secure. Object-centric data model. We touched on this, but it's worth a quick recap with a real-world analogy. Imagine a huge library where every book is an object with a unique ID. If two people want to read two different books, they can do so simultaneously without issue. But if two people want the same book, you need some coordination. One waits, or you get a duplicate copy. In Sui, each asset or piece of data is like a book, object. Transactions declare which objects they will interact with. If no two transactions want the same object, they can run in parallel with no problem. If they do want the same object, the system lines them up to avoid conflicts. Contrast this with Ethereum's account model. If two people are trying to update the same account balance or contract storage, Ethereum processes them one by one globally. Sui's approach eliminates a ton of unnecessary waiting by not lumping everything into one big state blob. It's modular. This is like the difference between a single-threaded program, one instruction at a time, and a multi-threaded program, many at once. Sui basically multi-threads transactions safely. Also, Sui's global state forms a DAG, directed acyclic graph of objects. You can picture this as a graph where objects point to their past versions and transactions link them. It's technical, but what it gives is an efficient way to query state and history, and it means Sui doesn't have a single linear blockchain of blocks in the traditional sense for all transactions, though it can present a simple view to users. Instead of chunky blocks, Sui can finalize transactions continuously and independently. It's more fluid. This again helps throughput and low latency. Move programming language. Sui's smart contracts are written in Move, which is a Rust-based language originally made for Facebook's DM project. It's strongly typed, focused on safety, like disallowing assets to be accidentally duplicated or lost. When you write a Move contract on Sui, you're writing what each object can do or how it can change. One way to think of it, Ethereum's Solidity is like writing programs that manage global variables. Any contract can poke at any storage if allowed. Move is like writing programs that manage resources, objects with strict rules, more like programming a self-driving car with lots of safety checks versus a regular car that will happily let you drive off a cliff if you're not careful. For example, in Move, if you define a coin object, the language ensures that coin can't be duplicated or destroyed arbitrarily. You have to follow the rules, e.g., only way to destroy a coin is to explicitly call a function that might burn it. This prevents bugs like double spending or losing track of assets. Sui's flavor of Move also has a bytecode verifier that rigorously checks contracts before they run, catching many errors early. And Sui's Move is integrated with the object model, so contracts are about creating and manipulating those objects rather than juggling raw addresses and storage slots. Net result: safer contracts, less hacks, and developers have a somewhat easier time reasoning about what their code does, though Move is still new, so devs have a learning curve. Layer and infrastructure. We already said Sui is a layer 1, meaning it's not built on another chain. It is the base. It doesn't need Ethereum or anything else to operate. It's also permissionless and decentralized. Anyone can run a validator if they get enough stake delegated. It uses epochs, a new epoch every 24 hours, for example, to rotate validators and manage the proof-of-stake mechanism, similar to how other POS networks operate. One more neat feature: Sui has a storage fund built into Tokenomics. This addresses the issue that if people keep storing data on-chain, validators bear costs forever. In Sui, part of each transaction fee for storage goes to a storage fund that later pays future validators for keeping that old data. And if data is deleted, users can get a storage fee refund, since the network no longer needs to store it. This is a clever economic solution to on-chain data bloat. It aligns incentives over time. It's those kind of little engineering/economic touches that show Sui's team really tried to think of many angles to make a sustainable, scalable network. To sum up, Sui works by combining a fast parallel execution engine, object-centric, DAG-based, with a secure smart contract platform, Move, and a refined POS consensus. It's like a sports car with a roll cage and autopilot, built for speed but also safety. All this under the hood wizardry is in service of one thing: making a blockchain ready for mass adoption. This one's quick. Sui is a layer 1 blockchain. It isn't an overlay or sidechain on Ethereum or anything. It's its own independent network with its own validators. In the crypto lingo, layer 1 means it's the base trust layer. Bitcoin is L1, Ethereum is L1, Solana is L1, and Sui stands among them. Sometimes people ask, is Sui an Ethereum layer 2 or built on another chain? Nope, Sui started from scratch, though it shares conceptual roots with the DM project, which never fully launched. So you won't interact with Sui via the Ethereum network. You'd connect to Sui's network directly, e.g. using a Sui wallet or a compatible multi-chain wallet. As a layer 1, Sui has to build its own security and validator set from the ground up. It currently uses delegated proof of stake, meaning SUI token holders stake their tokens to validators to help secure the network and earn rewards. It's not merging with any other chain's security model, it's standalone. The fact Sui is L1 also means it's in direct competition with other L1s like Ethereum, Solana, Aptos, etc. This is that layer 1 competition trend we mentioned, each offering different trade-offs. Sui positions itself as scalable and user-friendly from the base layer, whereas some others rely on layer 2 solutions or alternate designs. Time and user adoption will tell which approach wins out or if they all coexist with different niches. But one thing's clear, Sui is not an Ethereum killer per se, but it's definitely aiming to be a top-tier smart contract platform in its own right. It even explicitly challenges Solana's territory, boasting sub-second finality without needing any secondary layers. In crypto terms, that's like throwing down the gauntlet in the arena of speed and throughput. Every blockchain needs its magic coin, and for Sui, it's simply called SUI, pronounced Sui or just Sui, like the chain. The project name and token ticker are the same. The SUI token is the lifeblood of the Sui network. Here's what it does. Gas fees. Just like ETH on Ethereum, SUI is used to pay transaction fees, gas on the Sui network. Whenever you do anything on Sui, transfer coins, execute a smart contract, mint an NFT, you'll pay a small SUI fee to the validators for processing that operation. Staking security. SUI is a proof of stake token. You can stake SUI, delegate it to validators to help secure the network, and in return earn staking rewards in SUI. Validators need to put up SUI self or via delegators to participate in validating. This mechanism keeps them honest. If a validator misbehaves, their staked SUI can be slashed, in part. For delegators like us, staking SUI means we trust a validator and we get a cut of the rewards, new issuance plus fees, for helping the network. In short, SUI token holders are directly responsible for the network's health through staking. Unit of account and liquidity, SUI is the currency of the Sui economy. It's used in DeFi protocols on Sui, traded on exchanges, and provides liquidity in the network's DEXs and lending platforms. If you're using a Sui-based DEX or game, rewards might be paid in SUI, etc. It's the base asset that denominates value on that chain. Governance. Though Sui's on-chain governance is still evolving, SUI is planned to be a governance token too. That means holders can vote on protocol upgrades, changes to parameters, and other proposals once governance mechanisms go live. Essentially, owning SUI gives you a voice in the future development of the network, like how holding certain tokens lets you vote in their ecosystems. To give you an idea of scale, SUI has a capped total supply of 10 billion tokens. That's the max that will ever exist, but not all of those were available from day one. At mainnet launch, only about 5%, 500 million SUI were in circulation. The rest are being unlocked over time according to the Tokenomics plan, which we'll dive into next. This design scarcity, cap at 10 billion, combined with gradual unlocks, is meant to ensure the network is both well-funded and not too inflationary in the long run. One more thing. Sui's tokenomics include a storage fund, as mentioned earlier, and other mechanisms that use SUI under the hood. For example, when you pay for storage, that fee in SUI goes to the storage fund, which later pays out to validators. Also, some SUI might be locked as stake subsidies to boost validator rewards in early years. These details all feed into the economics of SUI. The bottom line, SUI token fuels everything on the Sui blockchain, from transactions to staking to governance. If you believe the Sui network will grow in usage, demand for SUI should grow, for fees, staking, etc. If the network stagnates, SUI's value likely does too. It's very much intertwined with the fate of the Sui project itself, as is usually the case for Layer 1 tokens. Let's unpack Sui's tokenomics. Essentially, who got the tokens and how they'll enter the market. This is super important for investors because it tells you about potential dilution, new supply, and where incentives lie. As mentioned, total supply equals 10 billion SUI, 10 billion. This is fixed, no infinite inflation, though there is some inflation due to staking rewards that is already accounted for in reaching that cap, 10 billion, if I recall correctly. The distribution of that 10 billion was determined at Genesis as follows: 50% community reserve. This is a huge chunk, 5 billion SUI allocated to a reserve managed by the Sui Foundation to grow the ecosystem. It's used for things like the delegation program, help bootstrap validators by delegating SUI to them, grants for devs, research and development funding, and validator subsidies to supplement staking rewards early on. Essentially, half of all SUI is meant to directly benefit the community and network growth over time. This is encouraging. It's not all in private hands. A lot is earmarked for public good, assuming the foundation does its job well. 20%. Early contributors. These are presumably the core team and developers who built Sui, Mysten Labs folks, and key early employees or contributors. 20%, 2 billion SUI rewards them for their work. Of course, these are likely locked investing over years, so they can't all dump at once. It aligns the team to keep improving the network long-term so their tokens gain value. 14%, investors. This portion, 1.4 billion SUI, went to venture capitalists and other investors who funded Mysten Labs in those rounds. They usually have lockups as well. 14% to investors is actually relatively modest compared to some projects that gave VCs like 20 to 30%. So Sui's distribution isn't overly VC heavy by percentage, though 14% of 10 billion is still 1.4 billion tokens, so it's significant. These investors will likely distribute or sell gradually as their lockups expire, which is something to watch out for. Token unlock events. 10%, Mysten Labs Treasury. This is held by Mysten Labs, the company, for ongoing development, hiring, partnerships, etc. It's like the company's reserve. 10%, 1 billion SUI is there to fund operations and ensure the core team can keep building without relying solely on external grants. 6%, Community Access Program and App Testers. This is an interesting slice. 6%, 600 million SUI, was set aside for early community members through the Community Access Program, possibly token sales to the community or distributions, and for those who tested Sui apps in DevNet/testnet. This is basically a nod to fair launch ideals, giving some supply to people who weren't investors or core devs but helped early on. I recall around mainnet time, Sui didn't do a broad airdrop like some hoped, but this allocation might have been distributed via certain programs, like sale on exchanges for public or testnet reward programs. The exact mechanisms might be detailed elsewhere, but the key is Sui tried to not let all tokens concentrate among insiders. A chunk was for the broader community involvement. All those add up to 100%. What about circulation and unlocks? At mainnet, only approximately 5% was circulating. That came mainly from the Community Access Program, public sale tokens, and maybe a tiny bit of initial circulating supply for staking rewards. The rest, 95%, is locked in various ways and is coming out over time, typically over a span of years, often 2 to 4 years for team investors, and foundation tokens might vest even longer or be used slowly for grants. There was a token release schedule planned to maintain network stability, and the foundation said they'd release tokens as needed to support the ecosystem carefully. For example, we saw news of an unlock in June 2023 of 58 million SUU, approximately 0.58% of supply valued at $215 million at the time, presumably some early backer tokens or rewards unlocking. And there are scheduled unlocks in 2024, 2025, etc. If you invest, you absolutely want to be aware of these because sudden increases in circulating supply can put sell pressure on price if not met by demand. There are resources like Sui Tokenomics papers or dashboards that show the emission curve. Sui's official site even had a chart of circulating supply estimates over 7 years. Another aspect, staking rewards. Sui's tokenomics include allocating some of that 10 billion to stake subsidy. Basically, extra tokens to pay out as staking yields in early epochs so that validators/delegators get good APR and are incentivized. Over time, as more transactions happen and fees can sustain rewards, these subsidies can taper. It's a common design in new POS chains to bootstrap security by giving high rewards initially from token issuance and expecting to shift to fee-based rewards later. Sui's documentation likely details how much of the 10 billion is reserved for staking subsidies. I suspect part of the community reserve covers that. The gas fee system in Sui is also tied into tokenomics. Gas fees are paid in SUI, and those fees are distributed to validators and delegators, so staking yields come partly from fees. Sui's unique thing is splitting gas into computation fee and storage fee. The computation part goes to validators immediately, and the storage fee goes to that storage fund we discussed to be paid out later to future validators for long-term data storage costs. This means some SUI is constantly flowing into a fund and then out to validators over time. It's an elegant solution to make sure if you store data on Sui, you effectively pay rent for it to remain stored indefinitely, and that rent is used to compensate those who store it. From an investor viewpoint, this mechanism means long-term utility for SUI. People needed to keep data on-chain, not just for transactions. In summary, Sui's tokenomics seem designed to balance rewarding contributors, funding development, and building a community-owned network. Half the supply for community programs is quite generous, indicating they want lots of developers and users to benefit. But always remember, large portions, like those 50% community and 20% contributor tokens, are locked but will unlock gradually. As they do, some holders may sell. That's the dilution risk. The flip side is, if those tokens are used productively, grants create popular apps, contributors keep working hard, etc. They add value to the network, which can offset the increase in supply. It's a long-term balancing act. So, you're intrigued and want to actually get some SUI tokens? Buying SUI is straightforward as it's listed on many major exchanges. You can purchase SUI on numerous centralized exchanges, including Binance, Coinbase, KuCoin, Bybit, Kraken, Bitfinex, and more. Essentially, all the big-name crypto exchanges picked up SUI when it launched. There was quite a buzz around its launch. Some did token sales or giveaways. Here's a quick step-by-step for newcomers. Choose an exchange. If you already use a platform like Coinbase or Binance, you're in luck because SUI is likely available there. Double-check by searching SUI in their markets. If not, KuCoin, OKX, Kraken, Bybit are also options. As of now, SUI is widely accessible. CoinMarketCap shows it trading on 90-plus exchanges globally, from top tier to smaller ones. Stick to reputable ones for safety and liquidity. Sign up, KYC. You'll need an account on the exchange. That includes providing ID docs for KYC, Know Your Customer, on regulated exchanges like Coinbase, Binance, Kraken, etc. Fund your account, deposit, fiat, USD, EUR, etc. Or crypto, like USTD, BTC, that you'll trade for SUI. On some platforms, you might buy SUI directly with a credit card or bank transfer if they support it. Trade for SUI. Find the SUI trading pair, e.g. SUI/USD, SUI/USDT, SUI/BTC, and place your buy order. Market order for simplicity, buys at current price, or limit order if you have a specific price in mind. Withdraw your SUI, optional but recommended for security. Once you have the SUI on the exchange, you can withdraw it to your own Sui wallet for safekeeping. We'll cover storage next. If you plan to trade frequently, you might leave some on exchange, but be aware of counterparty risk. Exchanges can be hacked or freeze withdrawals in worst-case scenarios. Now, a personal tip. I sign up, verify, KYC, and test multiple exchanges so I always have a plan A, B, C. Why? Because in crypto, an exchange can suddenly go down or suspend withdrawals. Learned that the hard way in a few incidents. By having accounts on, say, Coinbase and Binance and KuCoin, I ensure that if one platform has issues or goes offline during a crucial moment, I can quickly use another to cash out or trade. It's like having multiple bank accounts. Don't put all your eggs in one basket. I've literally run tests where I withdraw a small amount from each exchange just to see that everything works. This might sound paranoid, but after seeing something like FTX go bust, redundancy is key for any serious investor. On that note, I also make use of affiliate links to sign up when possible because they often give you bonuses or fee discounts. Full transparency. If you use my affiliate links, you can find them on my website. It also supports this channel. They're clearly marked as affiliate links, meaning I earn a commission if you use them at no extra cost to you. It's a win-win. You might get a trading fee discount or sign-up bonus, and I get a little kickback that helps me keep making content. Of course, you're free to not use them, but if you do, thank you. It really helps out. Always prioritize your own security and comfort. Pick the exchanges you trust the most. Some investors also opt to buy SUI on decentralized exchanges DESS on Sui's network itself, like Thesis or Turbos on Sui, which are like Uniswap equivalents on Sui. To do that, you'd need SUI or another asset on Sui, which can be a chicken and egg problem if you don't already have some. But you could, for instance, buy USDT on a centralized exchange, withdraw it into Sui network, if supported, then trade on the Sui DEX. That's more advanced and usually not necessary unless you're avoiding central exchanges. For most, the simpler route is just go to a major CEX as described. One more word of caution. Only use official websites or apps of exchanges. There are phishing sites out there mimicking exchange logins. Always double-check URLs or use trusted referral links. And enable two-factor authentication 2FA on your exchange accounts to add an extra layer of security. After buying SUI, you'll want to store it securely, especially if you're holding for a while and not actively trading. There are a few options to store SUI. 1. Sui Wallet. Official. Mysten Labs developed the official Sui wallet. It's considered the reference wallet by the Sui Foundation. It started as a browser extension, Chrome, etc., and now also has a mobile app. The Sui wallet lets you create a wallet with a regular seed phrase or even using ZK login, social accounts, for convenience. It supports sending/receiving Sui, staking your Sui with validators, viewing your assets like any tokens or NFTs on Sui, and even has an in-app dApps portal. One standout feature, because of ZK login, you could set it up such that you log in with, say, a Google account, and behind the scenes, a secure process creates your wallet. Pretty wild and user-friendly for newbies. The Sui wallet also supports Ledger hardware wallets for added security, meaning you can connect your Ledger device and manage SUI through the Sui wallet interface. 2. Other software wallets. There's a growing ecosystem of wallets for Sui. Some popular ones include Suiet, Martian, Surf, and Nightly. For instance, Suiet is an open-source browser extension wallet for Sui that even has a faucet for testnet tokens. Great for developers. Martian was originally an Aptos wallet that added Sui support, available as an extension and mobile in development. It has cool features like linking your Twitter X account to your wallet for potential airdrops or NFT rewards in the Sui ecosystem. Nightly is a multi-chain wallet supporting Sui, Solana, Aptos, etc. with a mobile app and extension, convenient if you juggle multiple chains. It even has an auto-approve feature for trusted dApps to save clicking approve every time. Surf Wallet is a community-built mobile wallet with ZK login option 2. Many of these wallets allow staking, swapping, and exploring Sui dApps directly. The good news is you're not limited. Pick the wallet whose interface you like and that you trust. Just make sure it's a well-known one to avoid fake wallet scams. Check that the wallet's code or team is public and has good reviews. 3. Hardware wallets. For maximum security, hardware wallets are the gold standard. Devices like Ledger Nano X and SafePal now support SUI. Using a hardware wallet means your private keys are stored in a physical device offline, making it extremely hard for a hacker to steal them. They'd need the device in hand and your PIN/passphrase. You can connect a ledger to Sui's network via the official Sui wallet or potentially others that integrated Ledger support. According to Sui's community, Ledger support was added. For example, Sui wallet is compatible with Ledger. SafePal's hardware wallet also supports Sui, and they even have a nifty feature like self-destruct mechanisms to thwart tampering. If you're holding a significant amount of SUI for the long term, I highly recommend using a hardware wallet. You generally still use a software interface, like an app, to view and initiate transactions, but you confirm them on the hardware device, which ensures the secret keys never leave the device. 4. Custodial versus non-custodial. If you leave your SUI on an exchange custodial, the exchange is holding it for you. This is convenient, but you're trusting them entirely. If you self-custody with your own wallet, non-custodial, you are in control via your private key/seed phrase. The rule of thumb in crypto: not your keys, not your coins. I always lean towards self-custody if you're comfortable with it, because then an exchange hack or bankruptcy can't steal your funds. However, self-custody comes with responsibility. You must securely back up your seed phrase and not lose it or get phished. I usually write the seed on paper, maybe multiple copies, and keep in very safe places or use a metal backup tool. Never store your seed digitally in plain text. For many, a hybrid approach works. Keep a working amount on exchanges. Plan A, B, seed exchanges as mentioned, for trading or quick access, and store the majority offline in a hardware wallet, or at least in a secure software wallet as a vault. Also, remember to double-check addresses when you withdraw from an exchange to your Sui wallet. Sui addresses are long strings of characters. Always verify you pasted correctly and maybe test with a small amount first. And bookmark the official sites for any wallet you use, e.g. suiwallet.com for Sui wallet, so you don't fall for phishing. One more safety tip. Many Sui wallets allow you to set up a password or biometric lock on the wallet app. Do that, especially on mobile, so if your phone is stolen, thieves can't immediately access your crypto apps. By taking these precautions, you can sleep soundly knowing your SUI is as safe as can be. Crypto security might sound like overkill, but given the irreversible nature of blockchain transactions, a little diligence goes a long way. Maybe you're not just interested in holding SUI, but actually want to be part of the action. Great news! Sui's ecosystem is thriving, and there are many ways to get involved, whether you're an investor, developer, or community enthusiast. Here are some avenues. 1. Staking and validating. The most direct way as a token holder to get involved is to stake your SUI and participate in network security. By staking, delegating to a validator of your choice, you help decentralize the network and earn rewards. It's a form of involvement where your money works for the ecosystem. If you're more advanced and have the technical chops and enough tokens, you could even run a validator node. That's a commitment. You need reliable hardware, uptime, and to attract delegation. But being a validator is like being a blockchain's miner in POS terms. You're core to operations. For most, delegating to a trusted validator, or several, is the way to go. And in doing so, you'll likely pay attention to governance votes and network upgrades too. Staking empowers you to have a say in who runs the network, and you indirectly vote by choosing validators. It's both hands-on and hands-off involvement. 2. Join the community and learn. Sui's community is huge and active. A simple but valuable way to get involved is to join Sui's Discord server. Link is on their official site and likely in this video's description, as we have a free educational Discord too. Sui's Discord reportedly had hundreds of thousands of members, where you can find devs, users, and moderators discussing everything from technical support to the latest dApp launching. Being there early can even expose you to test campaigns or airdrop opportunities. Also, follow Sui's official Twitter, X, and forum for announcements. They also have a community forum where you can ask questions or help answer others' questions. 3. Developer grants and hackathons. If you're a developer or have a project idea, Sui wants you. They have a grants program through the Sui Foundation. You can propose a project, maybe a tool, dApp, research, and potentially receive funding and support to build it. This is an awesome way to get involved because you directly contribute to the ecosystem's growth and get compensated. Sui has also hosted hackathons and events. For example, they announced Sui Basecamp, their first global conference in Paris, April 2024, for developers and community. Hackathons, both online and offline, let you team up and build something on Sui in a short time, often with prizes or investment for winners. By participating, you not only learn a ton about Sui, but also network with the team and other builders. 4. Learn and build. Sui provides a bunch of learning resources, from courses to documentation, to help newcomers. They literally have courses on their site for understanding Sui and Move. You can start by doing the Sui 101 tutorials, or join something like the Beyond the Basics campaign to deepen your skills. If you build a small project or even just tinker, share your experience with the community. You might become recognized as a developer in the Sui ecosystem. Being early in a new blockchain platform can be very rewarding. You could end up founding a prominent project or being hired by one. There's demand for Move smart contract developers. So dive into the docs and maybe try writing a simple Move contract. The barrier to start is not too high, especially if you have familiarity with Rust or Solidity. The Sui Foundation and others have also released Sui guides, like how to run a node, how to use certain tools. Use those to get comfy with the tech. 5. Participate in governance. As governance features roll out, voice your opinions. This could be on off-chain forums or on-chain votes about protocol changes. Being active in governance discussions, even as a delegator, you can influence how your validator votes, is a way to shape Sui's future. Early community members often become respected voices or even elected council members if Sui establishes such bodies. Don't underestimate the power of just showing up and being constructive in discussions. 6. Community events and ambassador program. Sui, like many projects, has ambassador programs where superfans can become official Sui ambassadors. These folks help educate others, host meetups, translate content, or moderate chats, essentially acting as extension of the core team in various regions. In return, ambassadors might get perks like exclusive info, swag, maybe token rewards, or just the clout of being a recognized leader in the community. If you love Sui and are good at community building, consider applying to that. Additionally, check for local meetups or events. Sui's community isn't just online. There could be workshops or meetups in your city. If not, you could even organize one. There's nothing like face-to-face networking to deepen involvement. 7. Use the dApps and give feedback. Are you more of a user than a builder? That's fine. You can still contribute by being an active user. Try out the DeFi platforms on Sui. DEXs like Turbo's Finance, lending platforms, maybe emerging NFT marketplaces or games. Early users often get rewarded. Some projects do retro airdrops. But more importantly, by using and giving feedback, you help those projects improve. Report bugs, suggest features. Projects love power users who care. This indirectly strengthens Sui's ecosystem because better dApps equals more users equals more growth. And who knows, you might find the next big opportunity by using new platforms early. 8. Content creation and advocacy. Another route. Do what I'm doing. If you like making content, create tutorials, write blog posts, make YouTube videos about Sui. There is always demand for explainers and guides. Sui is new and many people will be searching, what is Sui? Perhaps your article or video could be their intro. By educating others, you position yourself as an ecosystem advocate and can grow a following. The foundation might even feature community content or support it if it's really good. 9. Keep an eye on the ecosystem directory. Sui has a site, sui.directory or similar, listing projects built on Sui. Explore it to find areas that interest you, whether it's NFTs, gaming, DeFi, infrastructure. Jump into those communities. If you love gaming, maybe test some Sui games and join their discords. If you like NFTs, maybe Sui's NFT scene has some cool collections. Get involved there. Being active in sub-communities still loops back to supporting Sui as a whole. To wrap it up, getting involved in Sui can be as simple or deep as you want. From staking and voting to coding and creating content, there's a spot for you. Sui's early days are an exciting time where one person can still have a big impact. So if you believe in what Sui is trying to do, dive in and be a part of it. Just not literally dive. We explore responsibly, huh? And hey, speaking of community, we have a free educational Discord server ourselves. Link in the description. It's not Sui specific, but we discuss all things crypto, share tips, answer questions, and it's a great place to continue learning in a friendly environment. Consider this your open invite to join our little corner of the crypto community as well. Now for the million-dollar question, possibly literally. Should you invest in Sui, and what are the pros and cons? I'll give you a balanced view. Why Sui could be a big win, and what risks could make it go south. Remember, this isn't financial advice. Disclaimer incoming. It's an educational perspective to help you DYOR further. innovative technology and performance. Sui's tech is cutting edge. If it delivers on high throughput and low latency at scale, it could become the go-to chain for demanding applications. Think social networks, high-frequency trading, complex games. We've seen how Solana's speed gave rise to unique use cases like Serum order books, real-time games. Sui could push that even further with its parallel execution. In crypto, being faster and cheaper is a huge competitive edge for attracting users and projects. Sui's architecture is arguably more advanced in some aspects than existing L1s, which could allow it to capture a significant share of new Web3 users looking for smooth experiences. Strong team and backers, the team's pedigree, ex-Meta engineers, and the big-name investors behind Sui provide credibility. These aren't guarantees, but they indicate Sui isn't a fly-by-night project. When you have a 16Z, Coinbase, Binance Labs funding you, you also gain access to their networks, advice, and perhaps preferential treatment, like exchange listings, which Sui got. The team has a clear long-term vision, not just a meme coin or a fork of something else. That usually bodes well for sustained development and navigating challenges. And as we saw, even institutions are comfortable with Sui. An ETF approval signals a vote of confidence from regulators or at least institutional players. That can ease some regulatory risk concerns, though doesn't eliminate them entirely. Ecosystem growth and adoption. In a short time, Sui's ecosystem has grown with dozens of projects. They already have DeFi protocols, NFT markets, games, like there's talk of a shooter game launching via Epic Game Store using Sui for in-game assets. If Sui continues to attract developers, especially if Move catches on as a popular dev language, we could see an altcoin ecosystem flourish. More apps, more users, more demand for SUI, for gas, staking, etc. The fact that Sui hit nearly $1 billion TVL by 2025 and hosts a US regulated stablecoin indicates real usage, not just idle test money. TVL isn't everything, but it's a proxy for activity. If an altcoin season kicks in, platforms like Sui with vibrant ecosystems often benefit disproportionately. Money flows into their DeFi, their NFTs, etc., boosting token value. Sui is well positioned to ride an altcoin wave if one comes. It's got the buzz, the tech narrative, and the liquidity availability on big exchanges already. Tokenomics and community focus. Sui's token distribution, while it does allocate to insiders, also heavily leans toward community and long-term network incentives, 50% reserve, etc. If managed properly, this means lots of funding to encourage growth, which is good for the network and potentially token value. Also, a large portion of supply is locked or vesting, which can limit circulating supply in the early years, thus potentially reducing sell pressure, though one must watch unlock schedules. Additionally, since SUI is needed for staking and many network uses, a growing network could create a supply sink, locked in staking or in liquidity pools, etc. If demand outpaces new supply release, price appreciates. And because it's a POS token, holding and staking SUI can yield rewards, which is a nice benefit for investors wanting passive returns. Current staking APY will vary, but early on, these can be fairly high to attract validators. First mover in regulatory embrace. Strange as it sounds, Sui might have an advantage by being one of the first new L1s to get a US-listed investment product, the ETF. That could open the doors for more mainstream investment money to flow into Sui, as some traditional investors might prefer an ETF to buying tokens directly. It also suggests Sui isn't on the SEC's hit list at the moment. Contrast that with, say, Solana or Cardano being labeled securities in certain SEC filings, causing US exchanges to tread carefully. Sui might sidestep some of that, or at least navigate it better, if regulators view it more favorably. This is speculation, but perception matters. Being included in regulated products gives Sui a kind of legitimacy badge. The underdog potential. At the time of writing, Sui is not a top 5 or a top 10 market cap coin. It's somewhat under the radar to casual investors. Most talk is still about BTC, ETH, big alts like SOL, ADA, etc. That means if Sui executes well, there's a lot of room for price discovery. Early adopters often speculate that Sui could one day rival the likes of Solana, which at its peak had tens of billions in market cap. If Sui even gets halfway there, that's significant upside from current levels. Again, if it happens. Essentially, Sui could be considered an asymmetric bet, high risk but possibly high reward, if you believe in its tech trajectory. Unproven over the long term. Sui is a newcomer. Mainnet launched in 2023, so we have about 2 years of history max. And those included a bear market. It hasn't yet been truly battle-tested in a wild bull market or under extreme stress, though they did heavy testnets. There could be undiscovered technical issues. Maybe the parallel execution hits some bottleneck or edge case bugs when scaling. Remember, Solana looked invincible until it had a bunch of outages under stress. It's possible Sui could face similar hiccups as it scales. Early networks sometimes also have centralization in practice, e.g., a few validators might have a lot of power initially. If Sui's network is not as decentralized as hoped, that's a risk, could be more vulnerable to attack or collusion. In short, the tech concept is solid, but execution risk remains. Will reality meet theory? Investors have to monitor how Sui handles growth and whether any cracks show, be it performance, security, or otherwise. Fierce competition. The Layer 1 arena is crowded and cutthroat. Ethereum isn't standing still, with scaling solutions maturing. Solana is still pushing hard, recently stabilizing and improving, and other new L1s like Aptos, Sui's sibling, Sei, Celestia, Modular Approach, etc., are all fighting for mindshare. There's also the multi-chain narrative. Maybe in the future, people don't care which chain they're on as long as their wallet abstracts it. If Sui doesn't manage to attract a critical mass of developers and users, it could languish. Many L1s have come with fanfare and then struggled to build an ecosystem. E.g., some of the smaller ones from 2018 or 2021 booms. Network effects are huge. Developers go where users are, and users go where the apps are. Ethereum has that lock-in. Solana built a decent moat in its niche. Sui has to carve out a piece of the pie. If Aptos or others outshine it, Aptos has a similar tech base and also big funding, Sui could end up second place in the Move language niche. Or a black swan. What if Ethereum's upcoming upgrades, like dank sharding, ZK EVMs everywhere, etc., make it so scalable that alternative L1s lose appeal? Sui's importance is not guaranteed in a future where maybe Ethereum 2.0 plus L2 combos dominate, or where apps live on app-specific chains. It's a risk that the market simply might not need another smart contract platform as badly as we thought. Regulatory risks. Yes, Sui got an ETF approval, which is positive, but crypto regulations are a constantly moving target. The SEC or other regulators could change their stance, especially on newer tokens. If, say, the SEC in the future were to classify SUI as a security, currently there's no indication, but they have surprised us before, that could force US exchanges to delist it and US investors to drop it. Even outside the US, regulations on data privacy, K-login, uses social accounts. Could that pose privacy issues? Or sanctions could impact usage of certain features. Also, consider that Sui's initial token distribution involved private sales. Some regulators might frown on that as resembling investment contracts. It's a bit of an unknown. The crypto landscape has taught us that regulatory winds can change quickly. Just look at how Ripple's XRP went through a roller coaster with the SEC, or how exchanges had to drop certain tokens after the SEC mentioned them. So, while the ETF is a green flag, regulation remains a background risk for all altcoins, Sui included. Token unlocks and sell pressure. We touched on tokenomics. There's a lot of Sui that will unlock in the coming years. Early contributors, investors, and even some of that community reserve will gradually or periodically distribute tokens. For instance, if a cliff unlock releases hundreds of millions of SUI to investors at some point, some of them will take profit and sell. This could depress the price. In fact, Some traders preempt these unlocks and short the token, causing downward pressure leading up to an unlock. You need to be aware of these schedules. It's possible that Sui's price could face headwinds every time a big unlock happens until the majority of supply is circulating. Now, the counter is if the ecosystem growth outpaces that, i.e., new users and buyers greater than new sellers, the price can still rise. But it's definitely a risk. I can imagine headlines like, SUI unlock X million tokens hitting the market, will price dump? Those have happened for many projects. So as an investor, you must either have a long enough horizon to stomach these or try to trade around them. Not easy. Macro and market sentiment. Sui might be great, but if overall crypto is in a slump, SUI's price could suffer just because of risk-off sentiment. It's a high beta asset, meaning when crypto booms, Sui could boom harder, but when crypto tanks, Sui could dump more. We saw new L1s in 2022 to 2023 drop 80 to 90% from their peaks in the bear market. Sui itself, after launch hype, saw its price fall significantly as initial excitement cooled. Not unusual, early traders often flip. If Bitcoin dominance is high, altcoins like SUI often underperform. And if we go into a global recession or another crypto winter, speculative assets will be hit. So the timing of when you invest in Sui matters, and you have to gauge the crypto climate. It's not a Sui specific risk, but it's a risk that you could be right about Sui in the long run, yet still lose money in the short run due to market swings. Adoption uncertainty. Sui can build the fastest car, but will people drive it? The blockchain space is as much about community and narrative as tech. Ethereum has the mindshare, Bitcoin has the brand. Sui has to cultivate a real community of users, not just speculators. I recall some criticism at launch that despite Sui's tech, there weren't many unique applications live yet. A lot of the activity was just people farming airdrops or trading. If Sui doesn't manage to enable killer dApps that draw users in droves, the network could stay underutilized. And an underutilized L1 often sees its token value slowly bleed out, as we've seen with some ETH killers that now have very low usage. It's early, and Sui is actively pushing for real use cases like gaming collaborations, etc. So I'm optimistic on this front, but it's not guaranteed. Many partnerships or announcements in crypto don't pan out into actual active user bases. Smart contract risks and hacks. While Move is safer, no system is 100% hack-proof. A major exploit on Sui, be it a vulnerability in the Sui code itself or a big DeFi hack on one of its top apps, could erode confidence. For example, if a bug allowed someone to mint tons of SUI or crash the network, it'd be disastrous. The team would probably recover, patch it, etc. But trust once shaken is hard to restore. Just ask Solana after its outages or any chain after a critical bug. As an investor, you carry that technical risk. I know that's a lot to consider. In essence, investing in Sui is a bet that the team will continue to execute, the ecosystem will flourish, and that it can stand out among competitors, all while navigating token unlocks and external market conditions. The potential reward is getting in early on a platform that could be foundational to Web3 if all goes well. The risk is that it fizzles out or underperforms and you're stuck with a bag of tokens that trend downward. Before I ramp up to the climax here, let me slip in an essential disclaimer. I know you've heard it before, but it's important. This might shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. Phew, got that out of the way. Basically, be careful and be informed. Now, on to wrapping this up. So where does this leave us? Sui's story is one of big promises and early achievements, set against a backdrop of a volatile crypto arena. In just a short time, Sui went from an idea by ex-Facebook engineers to a live network catching Wall Street's eye with an ETF. It's not often you see that kind of trajectory. It's as if a startup car company not only built a new supercar, but got it into a championship race within 2 years. and people are betting on it to win or at least shake up the competition. As an investor or enthusiast, watching Sui feels a bit like being at the start of a high-speed rally. There's adrenaline. Wow, look at those specs. It could beat the others. And there's nerves. Hope it doesn't crash on the sharp turns ahead. The analogy isn't just figurative. Sui will face twists and turns in the market and tech development. If you ask my personal take, not financial advice. I'm excited about Sui. I've dabbled with the tech and I see real potential. The idea of onboarding millions of new users with Web 2 level ease is something crypto desperately needs, and Sui is among the pioneers of that movement. The fact that developers can use Move to write safer contracts is another leap forward. Fewer hacks means more trust, which means more adoption. And I love that Sui is pushing the envelope on throughput. If crypto is ever going to support, say, a global gaming network or stock trading platform, it needs what Sui is building. However, I'm also measured in my expectations. I keep an eye on how it and daily active users on Sui are growing, how many new dApps are launching. I watch how the token unlocks are handled. For example, if the foundation is transparent and strategic in distributing that community reserve, funding great projects instead of flooding the market. I also diversify. I'm not going all in on any one project because even promising ones can stumble. So Sui is one part of a larger portfolio for me, one that I'll be cheering for, but also one I'll rebalance if things change. As we conclude, here's a bit of urgency for you. The crypto space moves fast. Today's underdog can become tomorrow's star, and vice versa. If something in Sui's story piqued your interest, don't wait to investigate further. Maybe that means trying out the network. Get a small amount of Sui and do a test transaction or play with a Sui dApp. Maybe it means reading the Sui white paper or engaging on their forums. There's a window of opportunity when a project is still young. Information is abundant and mostly publicly accessible. But once it either takes off big or fizzles, the narrative gets set. Right now, you have the chance to form your own informed opinion on Sui before the rest of the world really decides what Sui is worth. Will Sui be the next Ethereum, powering a new wave of killer apps and justifying a massive valuation? Or will it be a well-funded experiment that ends up niche or overshadowed? The ending isn't written yet, and that's what makes it exciting and risky. One thing's for sure, I'll be watching closely. I'll be in the trenches using the tech, staying active in the community, and continuously evaluating my stance as new data comes in, something I encourage you all to do with any investment. Sui has given us one heck of a narrative so far. Dramatic tech innovations, big league backing, and the intrigue of regulatory acceptance. It feels like we're at the midpoint of a thriller novel. I can't wait to see how the next chapters play out. If you found this deep exploration helpful and engaging, then join me as we keep uncovering gems in the crypto universe. Here are some easy ways to stay in the loop and level up your crypto game. Subscribe to this channel and like this video. Your support not only motivates me to create more quality content, but it also helps other curious minds discover this video. Thank you, YouTube algorithm. Plus, you won't miss future updates where we track projects like Sui through their twists and turns. Join our free Discord community, link in description. Seriously, it's a great place to continue the conversation. Whether you have questions about Sui, want to share your own research, or just hang out with fellow crypto enthusiasts, our Discord is open and welcome to everyone. I'm in there regularly, as are many savvy members, so it's an invaluable resource for real-time learning and market insights, all for free. Check out the resources in the description. I'll link some official Sui resources, maybe the Sui dev docs, and also the affiliate link page on my website. If you're planning to open a new exchange account to grab some SUI or any crypto, using those affiliate links is a way to support the channel at no extra cost to you. I only list exchanges that I personally use and trust. It's always wise, as I mentioned, to have multiple exchange accounts ready. Think of it as your crypto contingency plan. Educate yourself continuously. If Sui taught us one thing, it's that this space doesn't slow down. Take advantage of the free education out there. Whether it's following Sui's updates or learning about other emerging projects, Layer 2s, other L1s, NFTs, etc., keep that curiosity alive. You can start by exploring the other videos on my channel. I cover a range of topics with the same thorough approach. And if you have a suggestion for the next deep dive, maybe another promising altcoin or a concept like SEC regulations impact, drop it in the comments. I do read them. Remember, knowledge is the best investment you can make. It pays dividends in better decision-making and sometimes in catching opportunities early. Sui's case shows how understanding the tech and trends can give you an edge. Imagine hearing SEC approved a Sui ETF without knowing what Sui is. Now you have that context and can act quicker than the guy who's never heard of it. Thank you for hanging out with me on this epic, deep research journey into Sui. I hope you enjoyed the storytelling, analogies, and insights. I certainly had fun sharing it. Crypto is one wild ride, but it's a lot more manageable and enjoyable when we navigate it together with clear info and a cool head. Until next time, stay safe out there, keep learning, and as always, may your yield be high and your risks be low. Catch you in the next one, and perhaps I'll see you in the Sui community or our Discord in the meantime. Happy investing!